Today, we're going to dive into a deceptively simple concept that has literally changed the entire landscape of finance. We're talking about the power behind small investments. You know, for decades, the stock market felt like this super exclusive club with a ridiculously expensive cover charge. But recently, a new mechanism has quietly revolutionized things, completely transforming who actually gets to call themselves an investor.
I want you to just think about this for a second. What if you could look at the absolute most successful, most expensive companies in the world and buy a piece of them with just the loose change sitting in your pocket? Seriously, imagine owning a real, legally binding piece of a corporate giant for a single dollar. I mean, it sounds like a gimmick, right? But it's not. It's a very real financial tool that is driving the democratization of investing right now.
To really appreciate how revolutionary this is, we have to look at what it replaced. So let's start with our first section, the old investing barrier, getting priced out.
Historically, if you wanted to buy stock, you had to buy whole shares. There was just no breaking it apart. If a company's stock was trading at, say, $3,000, you really only had two choices. You either produce $3,000 in cash to buy exactly one share, or you walk away. For most beginners, that massive price tag basically forced them to sit entirely on the sidelines. You needed thousands of dollars just to get your foot in the door.
Now, contrast that massive old barrier with this incredibly accessible new reality. $1 single dollar. Talk about a sigh of relief for anyone who's ever felt priced out of building wealth, right? The whole financial gatekeeping of highly expensive stocks has just quietly disappeared, and it's all thanks to a really simple, brilliant innovation.
So how is this actually possible? Let's get right into it with our next section. Enter the fractional share, a slice of the pie.
So, a fractional share is exactly what it sounds like. It's simply a portion or a fraction of a single share of stock. This mechanism lets you invest a very specific dollar amount into a company without needing to cough up the money to buy a whole share. You are quite literally just buying a slice.
And honestly, the absolute best metaphor for this concept is a pizza. Traditionally, the stock market essentially dictated that you had to buy the entire pizza, no matter how hungry you were or how much money was actually in your wallet. But fractional investing, it lets you buy a single slice instead. You don't have to buy the whole pie, especially if you only have $1 to your name, but you still own a very real piece of that pizza that is perfectly proportional to what you paid.
Let's run the math real quick. It's super simple. If a company's share costs $100 on the open market and you only want to invest $10, well, now you can do that. The system simply assigns you exactly 1/10 or 0.10 of a share. It's small, sure, but it is real ownership.
Okay, understanding the concept is one thing, but how does this actually happen? Let's check out our next section, how the mechanics actually work.
What's really fascinating here is the total shift in our psychology. The old way was strictly share-based investing. You went to your broker and said, hey, I want to buy one share, and you paid whatever the market price happened to be. The new way is completely dollar-based. You go to your modern brokerage app and say, I want to invest $10. The platform then automatically calculates exactly what fraction of a share that amount buys, based on the up-to-the-second market price.
But you typing a dollar amount into an app isn't the only way these fractions come to life. They're actually created in 4 main ways. First, sometimes companies do stock splits, like a 3-for-2 split, which leaves current investors with odd fractions of shares. They also happen during big corporate mergers and acquisitions. Then there are DRIPs, which are dividend reinvestment plans. That's where your cash dividends are automatically used to buy more stock, which almost always results in fractional positions. And finally, of course, you have modern brokerage platforms intentionally slicing up shares for their users.
Here is the absolute crucial point you need to take away. A fractional share is not some watered-down, second-class version of a stock. If the company's stock price goes up 10%, your fractional share goes up 10%. If the company pays a dividend, you get a proportional dividend based on your specific fraction. You are getting the exact same growth and the exact same dividends. The only difference is the scale, not the substance.
And that brings us perfectly into our main focus today. Let's move on to the power of small investments.
Understanding the math is great, but the real magic is how this fundamentally unlocks major wealth-building strategies for absolute beginners. When you can jump in with literally just $1, $5, or $20, you suddenly unlock strategies that used to require massive bank accounts. You get immediate accessibility to just start with whatever funds you have on hand today. Plus, instead of throwing all your money into one risky stock, you achieve instant diversification. You can spread your $50 across 10 different companies, lowering your overall risk. It also makes dollar cost averaging a breeze. You can invest a fixed amount, say $50 on a regular schedule, without constantly worrying about leftover uninvested cash. And finally, you get ultimate precision. If you want to invest exactly $500, you can do just that, right down to the penny.
For the longest time, people totally naturally felt that if they didn't have a giant lump sum of cash, there was just no point even looking at the stock market. Fractional shares validate those past hesitations because, yeah, the market was exclusionary. But today they completely empower you. The ultimate excuse has been removed. You can start building real ownership today, and you can do it entirely on your own terms. All right, as empowering as this all is, it's our job in this explainer to responsibly cover the full picture. So we have to talk about the crucial fine print, risks and considerations.
Let's quickly run through the real-world trade-offs so you know exactly what to expect before you hit buy. First, limited availability. Not every single brokerage offers fractional shares, and some only offer them for specific stocks or ETFs. Then there's liquidity. Because platforms have to handle fractional orders a bit differently behind the scenes, selling a fraction might actually take slightly longer to process than a whole share. Transferability is a big one to watch out for. Fractional shares usually cannot be transferred between different brokerages, so if you decide to switch platforms later, they'll likely liquidate your fractions, which could actually trigger a capital gains or loss tax event. And finally, depending on your broker, you may or may not get voting rights for your fractional slices.
There's also a very practical, everyday risk here. When you shift from typing in the number of shares to typing in a dollar amount, it is dangerously easy to make a typo. I mean, we've all hit an extra zero by mistake on our phones, right? Well, adding an extra zero here means you just accidentally invested $1,000 instead of $100. Because it just feels like you're typing in casual cash amounts, it can add up way faster than it feels. So always double-check your screen before confirming a trade.
So we've seen exactly how the old barriers to entry have completely crumbled. You don't need thousands of dollars anymore. You literally just need $1 and a decision to get started. So I want to leave you with this final thought. Knowing that the financial gatekeeping of expensive stocks is basically a thing of the past, what's really stopping you from investing right now? Take a moment to reflect on your own barriers and realize that today, the power of small investments is entirely in your hands.